Hi, I'm Perry Atkinson, General Manager here at theDove. Hey, check out our other videos and check out our website at thedove.us.
Well, welcome back to Focus Today. Steve Johnson with you, along with Dan Kosmatka. He's a CPA, and that's why we have him here, because we are at crunch time. I mean, this is crunch time for taxes.
This is crunch time, yes.
For individuals. Now, we had been talking during the break. Businesses actually had their break, their deadline a month earlier, but then you'll be, after the individual taxes, you'll be gearing up for their extensions.
That's correct.
Right?
After we get
so
done,
your day never ends, does it?
It's continuous. I mean, it's a year in. My actual slowest time is January, because throughout the year we are quite busy working on either regular returns, extended returns, corporate returns, individual returns, partnerships, etc.
So Christmas time, then, I suppose that December 31st deadline is critical too, then, right?
It is. That's important to get your last-minute deductions in for the current year, whatever year that happens to be.
See, all we see are the Liberty guys spinning their arrows, you know, this time of year and all of that, and people, come on in, do the taxes. But you guys are busy, when the ones who are doing all of these taxes for business and individual all the time. Okay, you're probably saying it would have been nice for everyone to have gotten their taxes done ahead of time. You could be in the Bahamas right now, just on a vacation, because everybody would have done everything early enough. In the real world, though, we're coming up to crunch time. So what advice do you have now? What are the problems you're facing that people come to you for answers?
Well, as I sit here today, April 14th, what would we do if you came into my office today and said,
yes,
what can I do?
Mm-hmm.
And first of all, I'd say, have you funded your IRA? If you've got earnings and can fund an IRA, go ahead and fund your IRA. That's a good way to reduce tax dollars. Although then you have choice. It could be a Roth IRA or a regular IRA. A Roth does not give you a current deduction, but it gives you future tax-free earnings on those dollars. So
and I've been considering that for some time. So it's like choice. I'm coming into you right now asking that. So I've already got valuable information.
Good. And then
so we're done with the interview.
Great.
What else?
The other thing is, don't be afraid of an extension. Extensions are fine. I mean, why do we extend? We extend because we don't have all the information. Some people procrastinate, that's okay. Others just don't have all of their K-1s or other documents needed to properly file a return. So let's go ahead and extend. Make sure we have time to really pull it together, get all of the facts pulled together, understand it, and then make sure the return is filed most appropriately. Okay,
now I suppose somebody might say, you know, every year I meet the deadline without a problem, but this year extenuating circumstances happen. I suppose it could be anything from a family member dying and they get an inheritance and they've never had to deal with that. I mean, I'm just thinking of the options. I suppose there's any number of options that can complicate an otherwise normal procedure every year, right?
Lots of complexities, and then from a humorous point of view, perhaps the CPA himself has not been able to schedule you in on an appropriate time.
Really? Because you're so busy?
We are oftentimes busy.
Wow.
And so, yes, not to...
It sounds like you're saying that mildly. We're oftentimes busy. That's like sometimes I'm a doctor and sometimes I do surgery. You do it all the time, I imagine.
We never want to say we're too busy.
Ah, okay.
Too busy means that you don't have room for me. And we have room. I have 33 people sitting in my office looking to help solve problems. And that's what we do. We're problem solving in dealing with tax and financial matters.
You know, let me just deviate slightly. Are there some of the more unusual dealings that you've had to have? I mean, certainly there must be some CPA business kinds of unusual procedures that you've had at the last minute to have to work through. Can you think of any just off the cuff that might have been the more unusual? I'm thinking of a death in the family. I suppose all of a sudden they get $5 million and don't know what to do with it. Has that ever happened, anything like that?
It has.
Really?
Yes,
yeah?
It has.
It's a nice problem we'd like to have, but at tax time that becomes a difficulty, I suppose.
Right, you have to plan for it or around it.
Yeah.
And like you say, a death is an event that you can't necessarily plan for. And so if somebody, you know, I've had clients die this year in the last couple of months, so what do? You're still trying to get their information together.
Sure.
And so now you're working with family members rather than the deceased, and so you have to plan around those events and life events and again, process whatever information you have available.
So you have to deal with the unexpected, of course, because a lot of us, we've never had to deal with that before. You mentioned an extension. Is there? Do you have to pay a fee for filing an extension?
That's a good question. When you extend your return, it does not extend the time for paying your taxes. You still have to pay. That's our biggest challenge, is when we're preparing an extension, is determining within a reasonable range what's the taxes owed, because you still need to pay the tax liability, and then it's evened out when you finalize the return, either a refund or a balance due.
So you can figure out how much somebody owes without having had done all the paperwork, pretty much, right?
Correct.
Is it like a good faith effort? They think this is how much I'll have to pay, so let's do it. Actually, it may be a little bit more, and you can always amend that. Does that work out okay?
As long as you get 90% of your taxes paid in, you can avoid penalty. If you're underpaid, there's typically, it's normally about 0.5% a month for the underpaid taxes that you have. And so the idea is to get within a range so that you avoid late payment penalty, underpayment penalties.
I suppose people waiting this long, for whatever reason, I mean, it's not because it's their fault, probably owe taxes, right? Do you have people who actually are getting a refund who've waited this long?
Yes.
Really? Why have they waited this long? What would be that reason anyway?
Oh,
just they had life got in the way or something?
Probably the most common is that they have multiple sources of income. So they're maybe waiting on a partnership return that they need their K-1s, or they have investments that there's information that's coming in on those types of investments that haven't fully produced everything that they need. Yes.
Yeah. Well, that would be a nice problem to have too. That would be interesting. You mentioned IRA contributions. I think we think of that as something that probably should be done throughout the year, but at this late date, you can still make an IRA contribution that'll still be good for this tax season. Is that right?
Correct. You can, as of tomorrow, you can still fund your IRA and take a deduction on the 2014 tax return.
And there's a cap, isn't there, on how much?
$5,500 is normally the cap. $1,000 more for individuals who are of older age.
Now, since I've got you here, I'll just kind of pick your brain a little bit. With Roth IRAs, as I understand it, and you touched on this, you pay into it and you have to pay the taxes up front, but then whatever you make off it, you don't have to pay the taxes on the profit. Is that right?
Correct.
Am I right on that? I mean, that's terrific, because if it goes up, you're free and clear, right? That's
the goal. You want investments that are going to appreciate in value. And so what does it do? It means that all that future earning is non-taxable. Another benefit of a Roth is that there's no what's called RMD, required minimum distribution. Most IRAs, when you reach 70 and a half, you have to start drawing monies out of them.
Oh, yeah.
You do not need to do that with a Roth, and it can be passed to the next generation, and they still get that tax-free benefit as well.
Is there a minimum you have to pay into it?
It's the same as the IRA. So as long as you have, it's the same threshold as a regular IRA, $5,500, $6,500.
Okay, initially, you're saying?
That's correct. And you have to have earned income, so you get to deduct the lesser of your earned income, $5,500 and or $6,500.
Okay, but what a great thing, as you're saying, for generation to generation, when you're looking at something that you would give your grandkids or whatever, that's a terrific thing to be able to do.
That's a good point too. If you have a young child that's earning dollars right now, have them start funding a Roth IRA. I mean, if you start at age 18 or 17 or whatever age and start funding it now, by the time you're ready for retirement, you've got quite a nest egg.
Yeah, that's cool. Well, we're talking about those are things that are great to think of ahead of time. What else do people need to know now coming up to this deadline? Some of the most common things that, maybe the second most common thing that people come into you saying, you know what, the deadline's coming up, I need to do this in time, but I don't know if I have all the paperwork. Is there anything that you find is kind of ignored or forgotten?
Well, the thing that I do find, sometimes somebody comes in and they have taxes owing this, I don't have the money. That becomes a problem. So what do you do? And
what do you do?
Well, you might wind up paying penalty, but if you have a home equity line, borrow on a home equity line to pay your taxes versus going out and taking a, let's say on your credit card, because credit card interest is non-deductible. Home equity interest is deductible.
You know, and all of these things, really, people need to talk to a person like yourself. I mean, you're giving kind of ideas, but really each situation could be different, and so that's why they need to come to somebody like you, I suppose, right?
That's right. And that's our job. Our job is to help assemble the components of a tax return. What's needed, how much have you earned, what are your deductions, and how do they fit together to come up with your appropriate taxable income.
I suppose somebody who has a small business and also they have to have their private taxes, they're having to look at two deadlines, aren't they? The one in March and then this one as well, right?
If they have a corporation, yes, because they have a March 15th deadline for their return. If they have an LLC or a partnership, it's an April 15th deadline, but it is a separate tax return.
Okay.
So yes, there are those various components too that, again, adds complexity to life.
Yeah, and I suppose if they delay it, then they have another deadline that has to be met too. So one's life could be like almost yours. You're dealing with the tax code and all that. I've heard that this year the tax code, for those of you who are having to go through the training every year for how Congress and the President has changed things, it gets more complicated. This one was one of the most, is that correct, coming up to this deadline for those of you in the business?
I wouldn't necessarily say one of the most complex, but one of the most frustrating, because Congress didn't pass the extender bills until the very last minute. And so we were trying to decide what deductions should a client be entitled to. As an example, one of the things that we have is called Code Section 179, which allows the expensing of equipment. And so that was one that it was at $25,000. The new threshold, once they extended it, it increased up to $500,000. Why is that important? It's important because it allows people to spend dollars that incentivize the economy, that energize the economy. And the more dollars we turn, the more effective our system is in supporting each other. And
so people held on to this longer, is that right? And didn't help the economy that much because of their delay? Is that what you were saying, kind of?
Somewhat, yes. Yeah. Well, like in my case, I had clients that were in that situation. I said, let's go ahead and acquire what you need, not what you want, but what you need. And if you have it, if we don't get it, at least we can get the regular depreciation. We just don't get the bonus depreciation. But I think it's more important to work around, what makes good business sense, not what just makes good tax sense.
Yeah, yeah. And with Congress not helping out too much, that can complicate things.
It's a continual challenge.
Yeah, that's a nice way of putting it. That's great. Well, I want to mention your CPA firm is Kosmatka, Donnelly Co, right? And people, can they call you? Are you full completely? Do you still have availabilities at 2:15 in the morning or something?
We have 33 staff, so yes, we have capacity to help.
You do? Okay.
But when we say, if you call me today, I'm going to say, let's plan on extending that return.
Yeah, I was going to say, I go with a little fear and trepidation to contact him because it might be on a delayed list, but that's what'll have to happen. Dan Kosmatka, thanks for being with us. Appreciate it.
You bet. Thank you.
All right, coming up, we're going to be talking, we're going to switch to politics and talk about Hillary and, who knows, Marco Rubio. Let's throw in a Ted Cruz and a little bit of Paul Rand, maybe. We'll see. And Jeb Bush in the wings. We'll have to see what's going on with that. We'll fill you in coming up in about 2 minutes. Get a unique perspective for you coming up on Focus Today.